What's going on, guys? It's your boy Andy Matrix, and today we're gonna talk about the Japanese economy and the Japanese economic crash and how it's going to affect you. How it's going to affect me, your country, even if you're not in America, if you're in another country. I'm going to explain why you're probably going to lose your job. The whole shebang, the entire economic crash, and how Japan is related to this disaster, right? So here we go. Okay, look. So it all started with the AI hype, right? It started with the artificial intelligence hype during the pandemic, right? ChatGPT came out, and then a whole bunch of other, artificial intelligence tools came out, such as AI generators, AI video editors, so and so. You guys get the point.
Hello, this is Yami Yugi from Yu-Gi-Oh! And make sure to subscribe to Andy Matrix's channel. Now on with the show.
So there was so much money invested into AI, new AI companies, and many investors thought that AI tools like ChatGPT were the future, and everyone was going to use them. However, something happened. They started to notice something. Customer analytics, I repeat, customer analytics showed that many people will not buy products or services that feature AI openly. I repeat, customers will not buy products and services that feature AI openly. So, I mean, I think you understand this. You don't really pay for ChatGPT. It's free, and you just use it because you want to, right? Because you got homework to do, or you had a resume to build, or a test to take, and ChatGPT was helping you with all that crap, right? That's the whole point. But most people are not paying for it. These AIR generators, most people are not paying for it. I've used, like 5 different AIR generators. I don't pay for them. They're all, I use them for free. So, and that's what happens. Customers not buying AI products or services puts a pressure on the bubble. And by that, I mean the investors and the loans that were taken out to fuel the AI hype. And so there were many investors that are blaming Japan for this bubble. So, how is this Japan's fault? How is it exactly? Well, listen closely. Pay attention, stop what you're doing, hear me out. Here we go. So, Japan's economy has been stagnant for 3 decades now. The Japanese government has been trying to change that by keeping interest rates low. And we're talking about borrowing money here. Companies need to take out loans to be able to operate and start new companies, right? Borrowing money from the bank, that's how you start out your company and hopefully be a millionaire. That's the whole point. However, that never happened. The Japanese did not borrow more money to start businesses. And so the Japanese government did not know what to do, right? You lower interest rates so that, the Japanese could start businesses and, help boom the economy. But the Japanese were like, nah, we're not taking loans. The Japanese, were not borrowing money. However, many investors from around the world, like America, Europe, they took advantage of the low interest rates of Japan and started to borrow money with the low interest rate. Because in Japan, the interest rates were as low as 0.01%. And that's really good for for taking out loans. That's like absolutely amazing. It says, they would trade Japanese yen for dollars and other currencies, and investors would make money from the higher return they can get from the market. Investors, yeah. So these types of loans from investors outside of Japan total to 1.5 trillion dollars. Since the Japanese yen would drop in value, these investors would make more money. Very convenient. And eventually, the value of the yen dropped too low, and thus the Japanese Federal Reserve increased the interest rate. This caused the yen to go up in value, and thus increasing the purchasing power of the yen. Okay, so the purchasing power of the yen goes up. So what happens to the Japanese now? Right. So what happens to the investors after the Japanese yen, goes up in purchasing power? Well, investors, after the interest rates went up, they lost all their money. And the way this happens is that when the money, and the money, aka your loans, that has more value than you invested, you just lost because the exchange rate does not give you as much. Hopefully that's easy to understand. It takes some mathematics, but hear me out. Hear me out. So then, what do investors do? They sold their Japanese yens and put it back into the market. So many investors started selling, just like in the stock market. And this makes the stock market go down because investors are not getting what they put in. So these investments only hurt rich people, right? And because rich people are the ones that create companies and businesses that will eventually create jobs, they can't do that if they are losing money. So, if the stock market starts doing badly, then companies will be pressured to pull back on expenses and lay off many employees and freeze hiring. Does that make sense? Yeah, and that is how we ended up here. So, look, the stock market and forex trading is not the economy, and the economy is not the stock market. The stock market determines whether or not if investors and companies will make more money. So when they lose money, we pay the price by losing our jobs. Yeah. Recently, the top 7 tech companies like Apple, Google, Facebook all together lost $800 billion, which is why you are seeing so many tech layoffs. Oh, good God. Good God. So, why is this Japan's fault? Because investors from around the world were taking out loans from Japan due to the really low interest rates in Japan, and the yen being at a lower value, the Japanese currency being lower. When the Japanese started to increase the interest rates, all these investors and companies started selling their stocks in the currencies, and lost all their money that they took out in loans, right? Hopefully that makes sense. I suggest you go and actually look up some information yourself. So in reality, it is the fault of the investors, not necessarily Japan. Japan, they were just the bank. They were just like, hey, we got low interest rates. You want to borrow money? Here you go. Right? And, finances are a bit hard to understand. I hope this helps. Again, go and do some research yourself. I try to break it down as simple as you can. So this is going to affect all of us because interest rates are really high in America, right? That's what the Fed is doing. They increase interest rates, hurts the economy because people stop borrowing money to start companies and other businesses and services. However, a lot of American companies, what they did, they went to Japan. They started taking out loans with the low interest rate that was so much better. And, Japan started to increase the interest rates. And all of a sudden, all these companies were like, okay, you know what? I'm selling. And here we are. So, yeah, we pay the price once again, the little guys. All right, guys, so that's going to be it. Make sure to subscribe to the channel and hit the notification bell for future notifications. It's your boy, Andy Matrix. Godspeed, baby.